PayPal stock is flying under the radar, recovering very strong in the past 3 months. PayPal stock had dropped more than 80% from its 2021 high, but the stock has gained over 25% in just 3 months. In this video, I will analyze PayPal stock and give you my thoughts on what is happening right now and whether this is time to buy or sell PayPal stock. What's up guys, and welcome back to the channel. PayPal stock is flying under the radar and quietly moving in the right direction, but PayPal might be about to bounce back stronger than ever, and this might be sooner than you think, so keep watching until the end. We've seen something similar with Meta stock. Although Facebook had been having a good year, where the stock had risen over 100%, the stock rose 20% in just one day, which is about $200 billion in just one day. That's insane for a company of this size. So I will try to answer one of the most important questions. Is this a good time to buy PayPal stock? Let me know if you agree with my analysis in the comment section below. Before we get into the video, I want to thank all you guys who watched my January videos. After taking a long break from YouTube, it's been great to hear from so many of you. Smashing the thumbs up costs nothing, but it shows me that you want to see more PayPal analysis videos. Can we get another 300 likes on this video? Help me make that happen. Subscribe to the channel if you're new. I will be doing regular stock videos again for the rest of the year, and I'm always open to suggestions on new companies to analyze. Finally, I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get into it. So just over a week ago, we got news that PayPal is the latest tech company to announce layoffs. Now straight away, this was seen as a negative thing, seen by a lot of people as a sign that the company is struggling, a sign that as the share price is dropping, PayPal is struggling and they're having to cut expenses. But in reality, it's quite the opposite, and I will explain why this is a good thing in just a moment. So PayPal is just the latest tech giant to slash jobs, as more than 25,000 tech workers across nearly 100 companies have already been let go in 2024, according to Track Insight layoffs. Now first of all, this is incredible, the amount of layoffs. When we're this far into the year, like it's only February. The stock market is booming, currently at all-time highs, yet these tech giants are cutting jobs at a level not seen in over a decade. Anyways, new CEO Alex Chriss said the company is reducing its global workforce by approximately 9% through both direct reductions and the elimination of open roles over the course of the year. Meanwhile, the company will continue to invest in areas of the business we believe will create and accelerate growth. Now let's look at the stock price for just a minute. PayPal stock has been falling steady since Q3 2022. In total, the stock is down over 80% in that time, and now PayPal are beginning to cut their workforce. Now Alex Chriss has been brought in to do a very specific job, the job of turning this company around. And he did say in a recent interview that this will not be achieved overnight, that PayPal have a clear strategic vision, but they're putting the foundations in place now and the recovery will truly begin in 2025. Now what I find interesting is that the words used here are remarkably similar to those uttered by Mark Zuckerberg in 2022 when Meta announced huge job cuts. Zuckerberg said the company would have to become leaner and more efficient by shifting more resources to a smaller number of high priority growth areas. Just like PayPal, Meta stock had dropped about 75% of its value in that time. However, their restructure, together with a new focus on efficiency and growth areas, has seen Facebook stock rise by over 400% in less than 14 months. I believe that right now PayPal is at the point where Facebook was back in November 2022. Now when we look at MarketBeat, a few things become very obvious very quickly. First of all, the stock is trading in the lower quarter of both its 50-day range and 52-week range. PayPal is now considered one of the most downgraded stocks in the market. But the current trading volume in the past few days is far above the average trading volume. Now it does seem that every time a stock drops by 50 or 60%, there seems to be a certain group of people who start talking about a short squeeze, that there's market manipulation, and that shorts are to blame for every stock that goes down. However, when we look at the short interest, it says here that there is less than 2% of the float sold short. And this data is backed up by Fintel, showing just 1.76 of the float sold short. So any talk that you see online that PayPal stock could have a massive short squeeze now because the stock has been driven down by shorts is complete lies spread by people who do not have a clue. Looking at the most recent analyst ratings, we can see that analysts have been slashing their price targets. The most recent of these is a round of downgrades after the earnings report, bringing targets down from $100 down as low as just $60. Remember too that when Meta stock had been dropping in 2022, these very same analysts had been dropping their price targets for Meta down too, rating Meta stock as low as $100. But within 14 months, the stock is now up to $468. So this is something to keep in mind. Looking at the charts, we can see very clear downward trend that PYPL stock is in. And we can also see that PayPal has a very strong level of support at the current price of $58. Anytime the stock has dropped below this, the shares have been snapped up and it's back above this again within 3 or 4 days. Even when PayPal stock dropped to its 52-week low in November, it was back above this support again by December. However, there is a very strong level of resistance around $65, and if the stock could break through this, the next level to break would be about $77. Now this might not seem very much when you consider that PayPal stock was over $300 in 2021, but if it was to rise up to this $77, that would be a rise of over 30%. Now in my opinion, there is a lot more upside than downside for PYPL stock right now, and I would be shocked to see PayPal drop below anything below $56. Despite the fact that analysts are cutting their price targets, I think they're massively underestimating the size and scale of this company. Now guys, there is tons of PayPal stock analysis on Seeking Alpha that point out so much information about this company, and I have picked out what I consider to be the best of these. So if you want to have a read of these, I have put links to these in the description below. Also, check out the first link in the description below. If you are not already signed up to Seeking Alpha, you can sign up using my link and get up to 50% off the yearly subscription. At the moment, Seeking Alpha are giving a free 7-day trial, so check this out. If you don't like it, then cancel it within the 7 days at no cost. Check this out using the link below. So, PayPal, 3 reasons why I'm loading the truck today. So PayPal's fourth quarter earnings sheet exceeded expectations. PayPal's total payment volume was up 15%, while customers continued to use PayPal's products more often. The fintech saw a boost to its operating income margins in Q4 2023, and PayPal's guidance for full year 2024 implies a 100% free cash flow return ratio. Now guys, as I said, there's a link to this article and more in the description below, so I'm not going to take a look through the whole thing, but I do want to point out just a few important points. But before that, when the stock tanked after the earnings report, a lot of people seem to forget that PayPal actually beat estimates for both revenue and earnings per share. It was other factors that were seen negatively. On customer acquisitions, PayPal lost accounts throughout 2023, and this was seen very negatively, and the company continued to lose customers in Q4. PayPal's account base declined 2.5 million customers in Q4 and ended 2023 with 426 million customers. Now, according to PayPal, these account losses related largely to unengaged customers, but this was the 4th consecutive quarter of account losses. However, there seems to be vital information that gets overlooked. PayPal's active customers are transacting more than ever, leading to growth in total payment volume. Transactions per active account increased 14% year over year, implying that users that do use the company's payment services are more engaged than ever. Solid free cash flow generation. PayPal is doing very well for itself in terms of free cash flow. On average, PayPal generated $1.1 billion in free cash flow every quarter in 2023, which is very impressive. And now the next bit here is very important. The sell-off after earnings was mainly related to PayPal's guidance, to which it seems investors are overreacting. PayPal's full-year earnings guidance implies no growth year over year. While the outlook was disappointing from an earnings growth perspective, PayPal continues to expect a solid $5 billion in free cash flow and a return of 100% of this FCF to shareholders this year. Now, while this outlook was disappointing from an earnings growth perspective, the repurchase volume of 5 billion implies the fintech could buy back approximately 8% of outstanding shares this year. Now, the size of PayPal is something that I said earlier is being underestimated. Given that PayPal has 426 million active accounts and is expecting $5 billion in free cash flow this year, I believe that PayPal's price earnings ratio of 10x seems inadequate. For example, SoFi, ticker symbol SOFI, which I've made a few videos about recently, so check these out if you want. There's links in the description below. SoFi is valued at over 23 times forward earnings, but they are expanding their customer base rapidly. And as it says here, the PE ratio for fintech rival Block is about 17x. Now, both SoFi and Block have stronger EPS growth prospects in the short term, as they do better on the customer acquisition front and their core products have momentum. PayPal, however, is attractive from a value point of view. Fair value PE ratio for PYPL stock could see the stock trade at least 15x forward earnings, given its potential for operating income margin expansion and high recurring FCF. The implied fair value based off full year 2025 earnings is $90, which implies approximately 58% revaluation potential from the current price of only $58. So let me know your thoughts in the comment section below. If you've watched all the way through and enjoy my content, then please hit the like button, it really helps the channel out. And if you're new, hit the subscribe button and bell notification, follow me on Twitter if you would like to see another update video soon. Nothing in my videos is financial advice in any way, I'm not a financial advisor, but thanks for watching and I'll catch you in the next one.